Hey guys, so in today's video, I'm going to be showing you how this simple smart money setup that plays out near enough every single day has helped me pass multiple funded account challenges, generate numerous payouts, and also gain an average of 8% near enough every single month from the markets. Now, not only have I been able to do this myself, but also have every single person inside of the VIP group by simply just following exactly what I teach. And if you watch this video all the way to the end, you are also going to know exactly how to pass your funded account challenges and generate multiple payouts. So it's very, very simple. It comprises of three simple mechanisms. The first mechanism is understanding where the liquidity is lying in the market. Number two is understanding the overall direction of the market. And number three is understanding your entry criteria. So first, let's start off by taking a look at this trade which we took inside of the VIP group. And I'm going to put a screenshot of this trade right here on the screen. So first, we're going to identify the very first mechanism of this trading strategy. Where is the liquidity resting within this market? So first, we're going to start off on the higher time frames. Now, on the higher time frames, what we're going to be looking for is areas of liquidity. Now, these can be found in multiple different areas, such as the previous week's high, the previous day's high, or even just areas that seem too obvious that the markets can target. Now right here you can see that I've drawn this X above this high right here because that looks like a very key high in the market and it looks primed for price to come and take as liquidity. Not only that, but we can see just above it we've also got the previous week's high. So both of these areas are going to have significant liquidity sat resting above it. This means that price is going to look to target this in the future to take it out. So now that we've identified our 4-hour area of liquidity, we can drop down to the hourly and we can see if there is anything else. Now what I love to do is find out where the Asia session high and the London session high has been marked out. So what we can see denoted by this blue box on the chart is that right here is the Asia high and then just below it we've got the Asia low. That means within this blue box is the highest point and the lowest point that price moved around during the Asia session. So we're going to highlight those because again, there is going to be liquidity above and below both of these areas. And above that, what we can also see is that we've got this nice 1-hour high, which has created a lower high in the market. Price created a lower low, lower high, lower low, lower high, lower low. Therefore, again, above this area, we've got a whole bunch of liquidity, which again sits nicely above our Asia high, giving us more confluence that we've got a whole bunch of liquidity sat right above it. What else can we notice? We can look to the left and we can see that we've got this massive area of inefficiency, right? We've got this fair value gap. Now that coincides with our area of liquidity, which also coincides with our Asia high. So what are we now doing? We're stacking our confluences to say that if price comes up and it takes out the Asia high and it takes out this hourly high and it taps into this fair value gap, that looks very, very nice for us to take a short. So that is mechanism number one, understanding where our liquidity sits. So we've identified that and now we move on to step number two, which is understanding the overall direction of the market. Now taking a look at this market right here, we can very clearly see that price is bearish. Now again, if you go up to the daily time frame, you're going to have a different bias. If you go down to the 5-minute time frame, you're going to have a different bias. So for this, I suggest that you simply just pick one or two higher time frames that you can go to denote your bias, because every single time frame is going to give you a different bias. If you go to the weekly, it will have a different bias to the 4-hourly. So just pick two. For me, that's the 4-hour and the hourly. Now on the hourly, we are very clearly pushing to the downside. We're creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So very clearly, we're in a bearish trend. That means if again we come up and we take out the Asia high and we take out this 1-hourly high and we tap into this 1-hourly fair value gap with the direction of the market being downwards, I would love to take a short because I'm pro trend. I'm not going against the flow of the market. I'm not swimming against the tide. I'm simply just going with the flow of the market. So that is mechanism number two. So now we move on to our last and final mechanism, which is to understand our entry criteria. So now if we come down to the 1 minute and I now play price on, All we're simply doing is sitting on our hands and waiting for price to take out our liquidity. Until then, we don't have a trade because we have to see this liquidity being taken, as that is mechanism number one. So once we play price on, we can see that eventually what price does is it comes up and it takes out not only the Asia high, but it also takes out that 1 hourly high. And then what does it do? It taps into that 1 hourly fair value gap. So if I continue to play price on, what we can see is that we create this bullish fair value gap. So if I zoom in, we can see that right here what we've done is created this bullish fair value gap, which tells us that if we tap into this bullish fair value gap, we should continue higher, right? With the pro trend. As we say, higher high, higher low, higher high. Very simple bullish trend. But what we're looking for is our entry schematic. We want to see this fair value gap get disrespected so that we can then take our entry. That will tell us that the markets have flipped from bullish to bearish. So if I now play price on, we can see that we tap into this, but we haven't disrespected it just yet. And then the next candle goes and absolutely melts straight through it. This tells me that we've now disrespected the bullish trend and that we are looking to go lower. So right here is where I then take my entry. We then put our stops just above that high. And now where do we target? Well, since we've taken out the Asia highs, where is our next point of liquidity? Now, as I said, I love to see where the session liquidity lies. And what we can see is that we've got the London lows right here, and then we've also got the Asia lows right there. And again, they're coinciding just below each other. So that means that below this low and below this low, we've got a whole bunch of liquidity that is just waiting to be taken. So we can then simply just put our take profit at the opposing liquidity. First, we can target the London lows, and then we can target the Asia lows. That gives us a nice 1-to-4 risk to reward. That means for every $1,000 that you risk, you're going to make back $4,000. So now, if we come back down to the 1 minute time frame, all of the hard work has been done, and now all we simply have to do is wait for price to tap us in, and then we just let it play out. We listen to the market. If it tells us that it's going to reverse, we then get out of the market. If it continues going lower, we wait for it to hit our take profit. We take our profits and then we leave. So if I now play price on, you can see that we come back, tap into our area of entry, and then from there we absolutely just melt to the floor. And just like that, we hit a nice take profit on this trade for a 1-to-4 risk to reward. Now, not only was I able to take this trade myself, but I also sent it into the VIP group as a sell limit order, so everyone was able to enter this position with me. And as you can see, we all hit take profit together. So that is a nice 1-to-4 risk to reward. So it's as simple as that. All you have to do is simply just follow the 3 mechanisms that I've just given you. And if you follow this religiously, make sure that you understand what type of market you're in, execute with precision, make sure that you're managing your risk, you will inevitably become a profitable trader. That is simply it. All you have to do is just stick to the plan. Now, if you are struggling with any of the concepts that I've mentioned in this video, if there's something that you don't understand, or if you genuinely just want to become a consistently profitable trader in 2025, then all you have to do is click that link down in the description where we'll jump on a call together. I'll audit your current trading journey to figure out where you are, and then we will build you a roadmap to make sure that you can become a consistently profitable trader in 2025. But apart from that, that is going to wrap it up for this video. If you did enjoy it, then don't forget to leave a like, comment, and subscribe. But on that note, I'm going to catch you guys in the next video.